Well, good afternoon. This is Michael Douville coming to you from beautiful Scottsdale, Arizona. It is March 8th, 2018, and we have just watching history unfold before our very, very eyes. This is an incredible time to be living, but it is going to cause turmoil in the world. We have tariffs coming. We maybe have trade wars. People are rattling their sabers, their economic sabers, and making all kinds of threats. And this was what happened in 1929. It just got carried away, and it just got worse and worse and worse. And of course, it caused a vulnerable world to go over the edge. And of course, we think we are in that period of vulnerability. So maybe this is the so-called canary in a coal mine that's telling us that this may very well be the precursor to tougher times. We've been talking about that we're in this window of vulnerability, and it looks like we may have. When we were talking about we know that the global slowdown is underway. We can see it in Japan, we can see it in China, and of course South Korea just printed a negative economic print, and they're actually contracting. So yes, that's underway. Don't know how tough it's going to get. Don't know for how long. Don't know if it's going to become a recession, but at this point, we're certainly not calling a recession call, but we have to have slowdown before you have recession. So maybe this is precursor. We'll know in 60, 90 days. Now, but in my business, the real estate asset class is vulnerable to a correction. It should be a national correction, and we're in that period of vulnerability again, like the rest of the economy. So let's pay attention to this. If we have a property that is scheduled to be sold, let's do it now. Now's the time to sell. You have the spring market. Let's get it up on the market and get it sold. If we're thinking about it, now's the time to act on that and get that done. Tenant quality, we need to start thinking that we're more concerned about tenant quality than maximizing the rents. So if we have an opportunity to get people that have much better credit, they have a much stronger job history, have much stronger industry that they're working in, those are tenants that we're going to be wanting to consider as our tenants. And instead of maximizing rent, we're going to start maximizing the underwriting on our tenants. We're also going to start thinking that you should start really thinking about the stock market and the bond market. So both of these are vulnerable to a huge correction. And people my age, of course, we have an awful lot of our wealth in that. So we've talked ad infinitum. Now is the time to really start acting on that. You've had your risk come to roost a little bit. 2-3 weeks ago, we had some pretty scary times that kind of calmed down. That's very, very typical in a marketplace. So I think you need to really start thinking of putting into an asset class like mine. And we're going to be very, very, very conservative in anything that we buy. But we are buying income for people my age, and income will be very, very important in the next coming years. So listen, if there's anything that we can do for you, I can help you in any way, shape, or form. Even if you just want to ask some questions, that's our mission, is to try and help. So my best to you, and God bless you. Bye-bye now.